Hey guys, it's Astro here with another market update, and we are going to look at Bitcoin, Ethereum, Solana on the charts. I'm going to give you my opinion on where things are at, how things are looking. But first, we're going to quickly look at what's happened in the last week in terms of news and what's up ahead. So we had the BOJ meeting on Wednesday, which was Tuesday for most of us here in the US and Canada, and they have decided to hold their rates, so it didn't have a huge impact on the market. And then the following day, we had the Fed, who again held their stance on the current rate situation, holding at 4.5%. So I think that gave the market a little bit of confidence that some of the recession talk that has been coming up lately, maybe we're not as close to a recession as possible. I think that helped ease some of that concern. But where we're at right now, kind of no man's land. Before we look at the charts, we will hop over and just look ahead at what we have coming this week. So we do have a week with some key data coming out here. Looking at the US, we have the PMI on Monday, so tomorrow morning, 6:45. So that can bring some volatility. Previous was 52.7 and 51. They're projecting the flash manufacturing to drop, and this flash services PMI to increase slightly. And then looking ahead, we have for the US, it's orange, so an amber alert, core durable goods. This can be an indicator, especially with talk of a recession and stuff. People will be interested in this data, which comes out on Wednesday. And then we have unemployment claims for the US on Thursday. So we do have, and then PCE price index on Friday. So we do have a week with a lot of data ahead. So just be aware of that if you are trading this coming week. And then a few other things I want to look at, because we are obviously in a downtrend right now. Even though we've had a nice move up into this 85K area, we are in an overall downtrend. And it's always good to look at some other data points. So up here in front of me, I have the daily exchange volume, and you can see it's in a heavy downtrend. We are putting in new lows. We are back at 33 billion, or almost 34 billion. So, back where we were in November before the Trump pump, which really spiked the exchange volume. And you can see basically from March, when we put in the ETF high, we were in a bit of a downtrend, which lasted quite a while. So just to point out that when we do hit these lows of between 30 and 40 billion dollars in volume, we can stay down there for a while. Now, I don't think we're going to be down for quite as long as we were from March to August, and we already have been in a downtrend basically since mid-December, with a few spikes here and there. But we are 3 months in to this correction. Looking at liquidations, tying in with the exchange volume, it seems that where liquidations are dropping off, there is a lot of people leaving the market. Traders are leaving the market, and there's just not as much volume right now, so they're not able to get quite as much money out of the markets. But looking at this, I would expect in the coming week, with the volatility ahead, quite an extreme move in one direction, whether that's going from this current mid-range 85K and shooting up to 92, 93 to catch a lot of the shorts. That's a possibility. I think on the downside, if we go below 78k, that's where we're going to get into those big liquidation on the downsides for the longs. So keep an eye on that. Keep an eye on the data that's coming out this week. I don't think there's any real sign of a bottom or a top, and it looks like we might want to go a little bit lower. So when we look at Bitcoin and zoom out, a few things I'm looking at here for underside support. We have our March high here at around that 73.9-ish K mark, which was also that final rejection before the Trump pump, where we came right up to rejected. And then we also have this bull flag that we created on our downtrend from March to August, putting in these lower highs before this capitulation down in August, which marked the low. And then we had that slow grind up, which not too many people were confident in, just because although we were putting in these higher lows, we were failing to actually put in a higher high. So confidence didn't really come until, basically the Trump pump. And then you can see that we actually had this, just before the Trump pump, we had this push up right before the election, and then a bit of a steady sell-off got into the election, which actually created a nice overside retest on that line. And then from that point on, we've had a very aggressive impulse wave up, which we are now coming back in to fill in balances. Personally, I'm still bullish on the overall chart until these levels start to break down. So first, this 74k, and then the next line of support for me is going to be, depending where we're at, could be around that 63k level. Another point to point out is also that low right before the Trump pump, which is around the 66.9k. So those are three levels: 74, 66-ish, and then a 63 would be an overside retest of that downtrend. But currently, we are back above the 50% level of the overall move from August low to the high of 109. We just fib this and we look at this 50% level, which is sits at 79.4, and then a few levels that I'm looking at on the lower time frame, or for the upside, are, we pull the high to the recent low. We are trading under the 50%, so we will have a lot of strength and momentum if we can regain that level and start getting daily closes above the 93k. And these other few areas that I marked off are just previous support, now resistance levels. So we've got this 91, let's call it 91,500, which we were getting pretty solid reactions off of previously. And then we have that, they had that one giant wick down, so that is also a key level at 89,200, and then which is also the 200 EMA. So on the 4-hour chart, we have the 200 EMA coming in at 87. So I think 87, 89, 91 are the levels that we need to start working up towards and regaining to have any confidence. And then once we start getting consecutive daily closes above 91.5 to 93, I think, the bulls will be back in control. But if we do get a move up in the next week to 89, I think it could be a good short opportunity, just because looking ahead at the data, we do have tariffs coming on April 2nd, it's looking like, unless, you know, something changes, which could cause that last push down. But in my opinion, if we get to that point and we're at 89 to 91 trading in this area, the likelihood of getting one last push down and actually putting in a higher low is very likely. Now, if we, from this point, if we fail to take out this recent high, which is at 87, and we, you know, range between 87 and say 83 this week, and then we get tariff news, there is a good possibility that we do head to put in a new low, and that, I think that could be that last low that we're all looking for. I've mapped out my Elliott wave here, and it looks like, you know, there's reason to believe that you could call it over. So I wouldn't be surprised if the 76 area we touched is the low, but to me it looks very possible that we can push down and maybe, you know, tap that liquidity from the March high, which sits around that 73,800. So that's an area, and we've also got a demand zone. So it's our added confluence here. We've got a bit of demand in that area, which we have touched once and had a nice push off of. So I think if we come back down, we've got that top and that demand zone, which could give us a nice bounce. We're definitely going to see buyers step in there. Another interesting thing is this fear and greed index at the bottom. You can see that this push down came with a lot of fear, and that took us to around that 78k mark. But when we had this rally back up into 95, we went through this kind of ABC correction move, which actually on the fear and greed index put in a higher low. So you've got a bit of a divergence here when it comes to fear, even though we put in a lower low on the chart. So that's Bitcoin. These are the levels that I'm looking at. So moving on, looking at Ethereum now, you can see on the daily, this kind of bear market low and this push up we've put in this very clear double top, and we have now pushed below the 50% level of that whole move. We're actually below the 618 as well, and Ethereum looks a lot weaker than Bitcoin. I think if Bitcoin was to get that push down to maybe put in a higher low at around the 78k mark, I think there's a good chance Ethereum will actually mark a new low. The Ethereum Bitcoin chart looks very weak as well, so there's good reason to believe that we're going to see a lower low form on Ethereum, and these are the areas that I'm looking at on the underside. So got a bit of a demand zone here. We've already tapped this demand zone. We got a push up. We're now, today we broke above 2k again, but we are now back under, and somewhere in this range of, you know, 1600 to 1500, that $100 price range, I would expect a reaction. Could mark a low there, but deeper down, this red line right here marks the 886 of this whole move. So that would be quite a big retracement, but a common reversal area. And then this yellow line is just a key support level, which we've come down and tapped that before, and that's marked off at 1,365. So these are my, you know, three levels, somewhere in that $1,500 range, somewhere between 1,300 and 1,400. And then if we were to really break down and get quite a capitulation, 1,250 I think could mark a good low for Ethereum. If you look at Ethereum's chart, it tends to, when it sells off, tends to sell off quite aggressively and fast. It's got a tendency to create some very big daily wicks. So Would not be surprised if Ethereum had just a very quick wick down to this 1,250 level to then close back above 1,500. Any move up on Ethereum, we've got a lot of overhead resistance. So you've got this 50% level, which is going to act as resistance. You've got the 200 EMA, which aligns with that. So I think, you know, in the coming week, if we get a move up into this trend line, we do have a good short opportunity there. And then to finish off on these charts, we're going to look at Solana. So Solana's a funny one. It was obviously hugely impacted by the Trump pump, which was this blow off top. How you want to read this chart is subjective, but from an Elliott wave perspective, we've got the three is very clear, and then this correction, which all alts in Bitcoin took from March to August. This is a very clear wave 4, corrective wave, and then we had this last impulse wave. So there's reason to believe that this first high is actually the end of the Elliott wave, but there's also reason to believe that the high's up here. I think it's more bullish to have an Elliott wave here versus here. Reason being is because basically the sign of an end of an Elliott wave is when the A wave comes down and breaks below 3, which after this high was put in, we did get that move down. We did an overside retest of the March to August downtrend, and then we got a double bottom and then a very sharp move up. So this is on the weekly chart. If this marks the A, this B move up was actually an SFP. So we failed to close above this where I have my 5. And then we are now in this C corrective move down. So if this is the case, I think we're very close to marking a low on Solana. And this would be very bullish to then begin a new macro Elliott wave on Solana, which, you know, who knows how that forms, but it would make sense for us to have a big wave 3 come down and retest these highs as a corrective move, and then have like that push up to $500 around that area. But the bearish case would be that the Elliott wave extended right up to that high, and this is all part of an Elliott wave, which is valid too, because in this inside this Elliott wave, you would have yourself a very clean 5 wave, which would mark a 5th wave. And if this is the case, it would look more bearish, because it would look like this push down. We haven't had a retrace back up to mark a B, so this push down would be our A. Any move up, again, you could get an SFP, but any move up would typically be a macro high or low. So that could be, you know, a double top back in at those highs, or something around the 260 to 270 mark, macro high or low, and then a big wave C would take us, you know, into that bear market. So this is a bearish case scenario. But current situation is, you know, Bitcoin alts look pretty good. They look like they're very close to a bottom. Bitcoin in this current 85k area doesn't really have any clear direction, so for me it's best not to trade. I'm not really a momentum trader, so unless I see a really good setup, anything I'm playing is quite a short, 1 to 2% move on a coin. I'm not looking to take too much swings right now. If I am, it's I'm slowly building into them. But something I've been following very closely is this dollar dominance. And on the dollar dominance chart, I like to add Tether and USDC together to get my chart. And need to switch to the daily. So on this daily chart of these two dominances added together, I am seeing this as a Elliott wave completed, quite clearly completed in my eyes. You've got this, wherever you want to tick your 1 from, then we had this 3 sharp 4 down, and then this push back up. Okay, so there's a few different ways you could draw it, but it looks pretty complete. What I like to do is, just to get a better projection of nearing an end, is looking at where we're at. So if we take this as our 1, this first high, and this as our 0, we almost, maybe we did, if I take that, we got very close to tapping the 4618, which is a common reversal area. Now, since then, we have had this move down below 3, which I like to see, to kind of signal a corrective wave. Now, with the Elliott wave being complete, we are going to be expecting a move up to put in a macro higher low to then move down. And this move up right here, wherever this ends, this would be your, hopefully, higher low on Bitcoin. So, if Bitcoin was, if this chart was continuing to drop now from this current level, and say it drops into this 50 EMA level, then basically if I switch to the 4-hour, it might be easier to see. But 2618, this will be these highs right here. You can see we've tapped this area marked as TP2. We've tapped that. We consolidated here for a long time, so there's huge support here at these highs. Tap, pushed up, came down, retested on the overside, and then continued to push up. So, even a rally to there on this dollar dominance chart would probably get everybody very bullish. I would imagine you'll see Bitcoin back at trading above 93k if we hit this level. But I would be cautious because, this A is often followed, or it always followed, by a B move up, and then this would be where Bitcoin has a move back, to 80 to 78k if it's going to put in a higher low. I think that's what creates that move, and then we start to break down from there quite aggressively. So that's what I'm watching. I'm watching that very closely, and that is my view currently on the market. I hope you liked it. Make sure to like, subscribe, and comment down below what you thought of the video, and I'll see you in next week's market update.